What if I told you that I've helped clients save over $100,000 every single year just by relocating their businesses to Dubai? Today, I'm going to show you exactly how this works using real tax calculations and the specific mechanisms that create these massive savings. I'm Mohammed, born and raised in Dubai, and I'm going to break down the actual numbers behind these tax savings, the $100,000 savings calculation. Here's the exact math on how these savings work. Let's take a UK-based consultant earning 100,000 British pounds annually. That's about $130,000. In the UK, they're paying around 28,000 British pounds in income tax alone. That's $35,000 going straight to the government every year. By becoming a UAE resident, that $35,000 stays in their pocket because personal income tax in Dubai is actually 0%. But that's just the beginning. Let's take a look at a bigger example. A European software company generating $2.5 million in annual revenue was paying 21% corporate tax in their home country. That's approximately $525,000 annually going to taxes. After relocating to a Dubai-free zone and qualifying for the 0% corporate tax on foreign-sourced income, they keep the entire $525,000. That's $500,000 saved every single year. So let's go into the tax structure breakdown. Here's how the Dubai tax advantage actually works compared to Western countries. In most Western countries, you're looking at a combined tax burdens of 40 to 50% when you factor in the corporate tax plus the personal tax on dividends and salary. Let's look at a UK example. 25% of corporate tax, and then you add additional dividend tax when you take the money out. You combine the effective rate, often that hits 40 to 45%. In Canada, we would have the combined federal and provisional corporate tax rates, around 26%, plus the personal tax on distribution. If you talk about the US, you have 21% federal corporate tax, plus state taxes, and then personal tax on salary or dividends. But if you look at Dubai, you have 0% income tax, you have 9% corporate tax for some different activities, on only the profits above $102,000. When with free zones, you might even qualify for the 0% on foreign income. So instead of paying 40 to 50% total tax, you only, at the very worst case scenario, you pay 9%. And on a $500,000 in business profit, that's $200,000 or more in annual savings. Now let me tell you about the specific mechanism that creates the biggest savings. And that's Dubai free zones, where it can offer as little from a 0% corporate tax to 9% corporate tax on qualified foreign sourced income. So if your business generates income from outside the UAE, whether that's online businesses, consulting, software development, e-commerce, selling internationally, that income is considered foreign sourced and it can be exempted from the UAE corporate tax. A UK company with $500,000 profit might pay $125,000 in UK corporate tax, plus the dividend taxes when distributed. But in the Dubai free zone, that's 0% corporate tax on that same foreign income. The savings in itself is just $125,000. Imagine what you could do actually with it. And for the personal income tax, well, this is where the savings really add up. So whatever you pay yourself as salary from your Dubai company, you keep 100% because personal income tax right here in the UAE is 0. So if you're talking about the UK consultant who's making 100,000 British pounds, he'll pay 28,000 in income tax. If he set it up in Dubai, he might pay 0 in income tax and have an annual saving of approximately $35,000 when we convert the British pounds to US dollars. Well, let's talk about a Canadian entrepreneur who's making 200,000 Canadian dollars. If he pays that in Canada, he will have to pay $70,000 or more in combined taxes. But if he sets himself up in Dubai, he'll be saving that 70,000 Canadian dollars. So if you're seriously considering relocating your business to Dubai to capture these tax savings, I can help you execute this strategy properly. You can reach me on Instagram at DubaiCatch or DubaiCatch.com to discuss working together in our relocation process. Now let's get back to the subject. Here's another massive savings you can potentially benefit from. It's the capital gains tax, which is 0 right here in Dubai. So if you sell a business, stocks, or property for profit, you keep 100% of the gain. Compare this to, for example, the UK, that's 20% capital gains tax on most gains. If you talk about Canada, that's 50% of capital gain tax. In the US, you're looking at anywhere from 15 to 20% federal capital gains tax plus state taxes. So for example, let's say you sold your business in the UK for $2 million profit. That will be actually $400,000 going into taxes. In Dubai, it'll be $400,000 going into your pocket. That's the difference. And get this, also dividend income and investment returns are also tax-free right here in Dubai. So if you have $1 million investment portfolio generating like 8% returns annually, in the UK, you'll pay 20% dividend tax, which is approximately $16,000 annually. In Dubai, you pay zero. So that means $16,000 in annual savings. So over the 10-year period, that's $160,000 in tax savings just by shifting your business to somewhere else and being able to sell that business eventually. And finally, let's talk about inheritance tax. Dubai has no inheritance tax. While many Western countries impose significant estate taxes, like the UK, with 40% inheritance tax on estates over 325,000 British pounds. In the US, it's 40% federal estate tax on estates over $12 million. And in Dubai, Habibi, it's 0% inheritance tax. For wealthy families, this can mean millions in savings passed down to the next generation. Now let's talk about one extra tax I haven't talked about in Dubai, and that is VAT, which is value added tax. And it's only 5% compared to much higher rates elsewhere. Like in the UK, you have 20% for VAT. In Europe, it's anywhere from 15 to 27% depending on the country. And Canada, it's anywhere from 5 to 15%. So for businesses with significant local expenses, this 5% versus 20% creates difference and substantial savings. And the payroll tax advantage in Dubai is that it has no payroll taxes or social security taxes on employers, unlike Western countries. So with the UK, you have the national insurance contributions. In the US, you have the social security and medical taxes. And in Canada, you have the CPP and EI contributions. So for example, if we have a business with $500,000 in annual payroll, in the US, for example, you might pay payroll taxes for $76,500. In Dubai, you'll pay zero. So that means annual savings of $76,500. So let's summarize the whole process right now with all the taxes right now. If we put all of it together for a successful entrepreneur with $1 million annual profit, this is how his business will look in a Western country. For the taxes that he will have to pay, first will be the corporate tax. And if it's 25%, he'll pay $250,000. And then the personal tax on the distributions, it'll be 20%. So that'll be $150,000. And the payroll taxes will be $50,000. In total, you might have to spend even half of that into paying taxes. For Dubai, it will be 0 to 9% in corporate tax, 0% in personal tax, 0% on payroll tax, 0% on inheritance tax, 0% in dividends tax. With the annual saving, he's probably going to save $450,000 in his pocket that he can invest somewhere. Even with the Dubai's 9% corporate tax, if applicable, you're still saving $360,000 annually for $1 million profit business. But you have to look at the overall picture. If we look at the wealth accumulated in a long-term period, you're looking at how these savings compound over time. Instead of paying $100,000 annually in taxes, so if you look at $100,000 invested annually at 7% returns, after 5 years, it's $575,000. After 10 years, it's $1.38 million. And after 20 years, it's $4.1 million in tax savings. If you think about it, that money could probably have went to taxes, but now it just went into your own savings for your own investment and for your own future. But last but not least, to establish yourself as a UAE tax resident, you have to spend 183 days annually in the UAE, whether you're set up as a free zone or even a mainland. And when you do that with proper exit from your own country, then you will definitely be able to optimize your structure annually as the business grows. And if you're ready to make this move and want to work with someone who can guide you throughout the whole entire process, because I know how much of a struggle it could be, then definitely contact me on Instagram at DubaiCatch or www.DubaiCatch.com. I'll personally handle your business setup, your residency, process, and even ensure you're structured correctly to maximize these tax savings from day one. So take care and see you soon.